Truth be told, Charlene, dalili ya mvua ni mawingu.
And truth be told, Marley, umesema the sign of rain is cloud.
That one.
You know why I love that proverb? Is, for sure, outcomes are preceded by clear signs.
Yeah.
And this is a new year. Happy New Year to our audience, our listeners on the different podcast channels, and our viewers on YouTube and all the channels that you're able to catch the TBT podcast. We are wishing you a happy new year, full of what? Good health?
Accident free.
Yeah, amen to that. Prosperity. And I'm so happy that we are going into this year. What were you saying? What is our motto for the year? We are coming in
bigger, better, stronger,
bolder,
zealous,
yes,
ready to continue this insurance conversation.
Yes.
And so I think from the feedback that we've had from the time we've started 3-4 months, going into 4 months now,
yes,
it is clear that the conversations we are having is a need for Kenyans. It's a need for the people around us, for our friends and our relatives. And so we want to continue bringing these conversations to our audience.
Yes.
And so welcome to 2025 TBT podcast. My name is Marley Mwanza.
And I'm Charlene Kimara. You may call me Mama Bima Kenya. And there's some big news.
Yes.
We are officially in season
2.
Season 2 of the TBT podcast. Karibuni sana.
What started out as a dream.
Yes.
Amazing. So season 2, yes. Karibuni. And so today we want to prepare your 2025. What is it that you need to be looking forward to? I know most of us are doing financial planning, goal setting, vision boarding.
Have you done your vision board?
I am actually. I'm in the process. Actually, I'm printing out the photos, and mine is very imagery. It's very realistic on the items that I want.
Yes.
And so I'm printing those out and putting them in a nice frame.
Yes. And speaking of vision board, so I did mine in December. So I did that on Canva. I took a template. The template I actually used for last year. And the shocking thing was, so last year was the very first time I vision boarded.
Yeah.
When I went to my last
actual
year,
photos and all?
Yes.
Okay.
Photos, kila kitu. Then now I print them out. Now, if you come to my office, I have this small board on my wall. I have actually color coded my vision board.
Nice.
There's one whose background is like this beautiful sort of like fuchsia, and then the other one is like in gray. Those dreams are not about to escape me. They are on my phone.
Clearly, they're in fuchsia.
Yes.
Yeah.
But I think what really struck me when I was working on my vision board for this year, when I went through the things I wanted to accomplish last year, I think somewhere along the year, I just got into, just chasing after my goals and my targets. But now when I actually went through everything I had set out to achieve, I realized that I had hit like 90% of my goals for last year. That encouraged me, by the way, Marley. So this year was also very intentional, just went through the same process and ensured that by the time I was coming into the new year, that was already done. And yes, I've ensured that I've put them in places where I can see them all the time. Nice.
I should have done that in December, but I'm not late.
But this is still a good time. It's still early in the year.
Yeah, but speaking about 2024 achieved dreams, I think this podcast was one of those. It's massive. 5 years of thinking and planning and culminating into this. And the people who've subscribed, the number of people who've come up to us on socials and physically telling us the feedback, it's amazing. So for me. And
one day we need to have an episode to talk about where TBT, from that idea. I think it's a very beautiful story. The day Marley will come and tell you that story, I still get amazed every time. We talk about it and how even we sat down, you sowed that seed, we had that discussion, and 3 months down the line, here we are, season 2 of the podcast.
Good. So welcome.
Yes.
Charlene, we need to guide our viewers on the things that they need to set goals on relating to insurance and
protection planning. Yes. The truth is, as we work on our financial goals for the year, I think we tend to place a lot of emphasis, say, on the investments, on the savings. I
School
also
fees.
do hope that we are also working on the retirement bit, and we have something later in the episode on that. We have some breaking news from the desk of the CEO of the RBA, and fantastic news, by the way, guys. But the one aspect within our financial portfolio that I feel is usually really neglected is when it comes to protection planning. So I think it's just right that we, as the hosts of the TBT podcast, we show maybe our audience on what are some of those insurance plans that they should consider on having as they go into the new year.
Yes. So we start with the families. So what do families need? What was as you think of a family setup? What type of insurance do you need?
Okay. So one, definitely top of mind, I'm thinking a medical cover. Okay, this could either be the SHA.
Yes.
That is the previously NHIF, really.
Yes.
Please ensure that you are on the government provided.
That's actually basic.
Yes.
Basic. Yeah.
SHIF as the basic plan.
Yeah.
But if you can also go ahead, if for example you're in a family and you don't have an employer provided cover, of course, if you have an employer provided cover, that is a big plus for your family. But if not, you could also consider having a private medical cover. And just to remember that, there are affordable plans in the market. There's something for your budget. This could range either from being a budget policy to being like a premium cover or even an international cover, whatever works for your pocket.
Yeah.
As a family person, you want to ensure that you're mitigating against the risks of a hospitalization that could really dent your pocket.
Yeah.
Okay. So ensure that you have a medical policy for your family.
Okay. So two things on the medical policy. One is for me, I advise clients inpatient is primary. Inpatient cover is primary. You can decide whether or not you want a maternity, dental, optical, all those covers. But inpatient, that is primary. You need to have that because at any point of an admission, just the other day, one of my friends' parents was admitted and they requested a deposit of 400,000 on the spot. An admission of it's an emergency. This person has to be admitted and it's an ICU admission. So inpatient mandatory. And two, you've talked about the people who have employer covers. It's important and prudent that you go check out your employer cover, what it's about. Actually ask your HR or your admin, what does it cover? Because I find that most people, they only get to find out that discussion when they're going to hospital. So you need to know what are my benefits, which hospitals can I access, and who do I need to call in case of an emergency, do you have an ambulance service, etc.
And I think, speaking of that, Marley, especially for employers or an employee who's watching this and they're like, oh no, I don't even know what my employer provided cover really entails. I think this is something that you do every so often, especially for the schemes that you currently manage. I think it's time you speak to maybe your HR to invite your insurance provider, for a session, for them just to take you through. Those sessions really are free, guys, and it's, I'm sure at the point where we are selling as agents, that is one of the,
benefits. The value proposition that
we present, So please ensure that actually, if you're HR at this point and this hasn't happened, for your team, please organize for that. I think it's important.
Agreed. And on top of that, there is wellness, there is preventive care as well. And I think most of us, we want to action when there is a need and the time comes when you really need to go to hospital. But I do think part of what medical covers offer is a wellness conversation. So you can actually go to hospital before this year goes further and get to know the status of your health. If you've decided you're going to go to the gym, then you need to know what it is, how your health status is before you show up at the gym. If you've decided you're going to do a fast, I know many churches right now are doing 21-day fast and things like that. So you need to get to know how your health is. What else? If you're going to travel, if you're going to, your child is going to boarding school and things like that, just get to know their general status and then proceed.
So other than medical insurance, what else is there?
For families?
Yes. Like when it comes to assets, I think right now the international media is really captivated by the fires that are wreaking havoc in, is it Palisades? Palisades, okay.
LA County.
Yes.
Yeah.
And I think that really has brought us to the forefront that, I mean, wildfires, like out of nowhere.
Yeah.
Like climate change is a thing,
Yes.
Marley. And I keep saying, for those of us, if you have assets that you value, it could be your home, it could be, your motor vehicle, it could be just whatever assets that you have, please ensure you have insurance on that. So it could be your home, have that home insurance.
Yeah.
If you own the actual structure, insure the actual home, insure the contents, so that you're not even like, you're not always walking around looking out, will my phone be snatched? Okay, fine, we still need to take the normal precautions.
Yes.
But then you also have that sort of like comfort that, should anything happen. Last year, we saw a lot of Kenyan families really going to distress during the floods.
Yes,
You remember
yes,
that came and destroyed so many homes and properties. So I think we need to go into 2025 having planned for such eventualities. And one way of doing that is actually taking like asset insurance, taking home insurance, for example.
Yeah.
Yes.
Yeah, and these are very simple things. You might think the wildfires in LA that's a whole extreme. But even the floods that you've just mentioned, someone is driving from where? Kiambu Road. Floods come, you have to get out of the car.
Yes.
You see your car just drifting away, all the way damaged. Is it insured? Is it comprehensively insured?
Comprehensively insured.
Your home, anything can happen really. As simple as a TV.
Yes.
Your child is playing around, hits the TV. What happens? You have to purchase a new screen with money that you do not have. And
Or even if you have money that doesn't necessarily have to be used to purchase a new TV.
Exactly. And you can't, watoto hawezi kaa bila TV. Joe, we're now in YouTube generation. They have to watch TV. So these are become a must-have kind of cover.
Yes.
So we're talking about a domestic package here, where you have your home, everything within that home, the TVs, the mobile phones, the laptops, the electronics, the furniture, everything is taken care of at a very good and low. I think domestic package is one of those that you must have.
Yes.
Yeah.
Okay, fantastic. So other than that, what other policy?
So I think for families, that those are really mandatory.
No. Hey, we can't finish the family.
Okay. So we talked about health.
Before we talk
and
about
domestic.
life insurance.
Okay.
Please, to our parents out there. Of course, I'm a huge proponent of life insurance.
Okay.
And I keep saying, as you go into 2025, please have discussions with your agent, especially on matters income protection. How can I ensure that, God forbid, if life was to throw a curveball my way, and whether this curveball could come in the form maybe of a critical illness or of a disability or premature death, I ensure that maybe the 500K or the 100,000 shillings or the 200,000 shillings that my family actually depends on every single month, and that is coming from my side, that I can be sure that I'll be able to replace that paycheck into my home. So I think life insurance, we can never overstate the importance of families and parents really securing their homes with life insurance. This could be like a pure life cover for purposes of income protection. It could also be starting to plan for your children's education at this point, I think this is a good time also, especially early in January, to sit also with your financial advisor and see, because you may have taken that education plan for your kids 5 years ago, 7 years ago. It was a 5K policy. It's still the one that you're hanging on to right now and saying, I have an education plan, come on. 3 babies later. So I think it's a good time for, families, especially the parents, to really sit down with their financial advisors and really see, do we have the right coverage? Is it ample coverage? But please, we need to go into 2025 and hopefully to also change the statistics. Every time we hear of insurance what we were taught that it's the distribution, not the penetration.
Yeah, it's not the penetration, it's the distribution.
The distribution.
Yes.
For life insurance, being at a measly 1.2%, it just breaks my heart every single time I hear of such statistics. We need to do better, and I think this really starts from the family setup. Yes.
Agreed. Anything else on family?
Families. Also, parents, don't forget yourself. Ensure that you're doing some elements, maybe of retirement planning. I know it's still protection planning because you're protecting the older you.
Yeah.
I know there'll be a lot of focus towards the end of our discussion on matters retirement.
Yeah.
But yes, ensure as you're going into 2025, we are the generation that will end that black tax.
Yeah, your children are not your
cycle.
Insurance, please.
Yes, and they will not be your retirement plan. So ensure that even as you give so much, to your loved ones, to your children, as you're providing for everyone else, you're also at the back of your mind, you also have yourself there.
Okay.
The older you, because only the younger you can take care of the older you.
Nice.
Yes.
Businesses. What about businesses?
For business people?
Yeah. For business people, you need to protect your assets.
Yes.
You need to protect the people that work for you. Then you need to protect the profits.
Profits, and also look at the liabilities.
And the liabilities that might come with the business that you do.
Yes.
Yeah.
And I love that. That is a snippet. And you'll get to meet the voice behind all that wisdom and insights.
Yeah.
That's the CEO and founder of Dawit Insurance, the amazing Ken Cairo.
Yeah.
So you'll get to meet him in the next episode. You do not want to miss that.
Please.
Yes.
Okay. So I think we've comprehensively covered the business person.
Business, families.
But when it comes to people,
Yes.
there's some other classes of insurance in there. There's WIBA insurance, which is actually a mandatory for a government required cover when you have employees. There is the personal accident covers that if any of your employees is injured while at work or doing the work that you've engaged them for, then they are paid. And lastly, there is health insurance for them as well. So as much as you're taking care of yourself, and we found a lot of these situations where business owners are covered, but the employees are not. So in the case where an employee has to say, I'm sick or take off, then the business stops because this one person, or particularly for these SMEs, one or two people determine whether or not the office opens.
Okay.
Yeah.
And I really love that. I mean, if you're talking of such a key personnel, maybe it's good also for business people to acquaint themselves with key man insurance, key person insurance, because we've seen in the absence of a key person, this could be someone maybe with a very unique technical skill within the business that may take too long for you to be able to, in case they are no longer there, for you to replace them. So in the event of such, it's good for a business to consider having key person insurance or key man insurance. So another group of people we've talked of families, we've talked of business people.
Yes.
We have the younger Kenyans who are probably wondering, hiyo mambo ya familia sijafika hapo.
It's insurance for us.
I'm not really, in business. How about for that young Kenyan Gen Z, who is planning, for their year, and they are doing their financial, planning. What are some of those maybe insurance, policies that they should consider?
So for starters on that, when we mentioned this, if you were to advise your younger self, we had mentioned this in our previous episode, what would you do? And the main thing that came up is to save. So we'd find that young people, there's a perception that you don't have money when you're young, but there's something you have. There's some income here and there that you will have. So how are you saving this money? And so the instruments, money market funds, very important. So you might be feeling very healthy and all other things are not affecting you, but this money that you have, you will need it at some point. So where are you putting it? That vehicle called money market fund is very important. Yeah. And we also talked about trust funds. They can set up a trust as early as possible. So start saving very soon.
Yes. Yeah. And as they start saving, please, I know you're at the peak of your health. At this point you're feeling huwezi guzika, but please get that health cover.
Yes.
I think Marley already said, even if it means a basic inpatient only plan,
Agreed.
ensure that you have that, so that one hospitalization or even an accident. You see, the one thing about younger people, they tend now to be more they have a higher risk appetite.
Yeah.
So you may find yourself doing more outdoor.
Yeah, bungee
things.
jumping.
Yeah, I know, right? Right away. So
the stunts that these young people pull. Yeah.
yeah, so the lifestyle at this point is very active. So ensure that this would be a good time to actually have a personal accident cover, a PA cover. But the guys, PA covers are so affordable. I don't want to say cheap, but your PA cover could be starting from something like 100.
This one qualifies as cheap. This one qualifies
it
as
is
cheap.
actually cheap.
100, 500 shillings per year.
Yes.
That is
like
cheap.
1282, you have a PA of like 500k.
Yeah.
1,282 bob, guys, for the whole year. So really, sit down with your insurance advisor, get to see what are the options available.
Yeah.
Please, if you already have your little house somewhere, I know it's cute, by the younger generation, very cute homes.
They have homes.
Yes, they do. They're little apartments and all. Please ensure that you have home insurance. Home insurance is also really affordable. I'm sure home insurance premiums will not go anything beyond 10K for the whole year for a home of a young Kenyan, really. And we do even have packages that are already pre-done. And I think they start from as low as 3,500 shillings in the market. Premium for the whole year. So please ensure that your phone, your laptop,
everything that is in that studio, your PS, a lot of gadgets.
They are insured.
A lot of gadgets nowadays. What are these things called? The buds. There's some expensive buds nowadays. So all that.
Yes.
Please make sure that all that is in the listing for things to be insured.
What is that you're telling me about fear or love? What was
that? I was listening to something this morning.
Yes.
To saying the emotions that drive human beings are spaced into two things: either love or fear. So you're either reacting to a fear that you have, or you're reacting to love, and that spans beyond relationships, career, families, businesses. All these things are a reaction to either of those two emotions.
And I think it even comes into today's discussion. I mean, if you love your all those old risk items that you have in the house, it could be your phone, your laptop. And if you're just fearful that one day mtu anaweza tu get insured.
Please.
One last group of people. How about for our retirees?
So retirees, I think that's what we want to talk about lastly.
But even before we talk about the community, what are some of the things, the people who are really working towards, now leaving the workforce? What are some of the maybe insurance plans that they can consider?
I recently had an 80-year-old, actually 81. He just turned 81 the day, and he took that opportunity on his 81st birthday to show up at my office. And he was like, I know I have been well. He's quite a healthy man. Looking at him, he's aged gracefully for sure. But he was like, I am now turning 81 and I do not want to find myself in a situation where I'm calling my kids for I need this, I need that. I want you to tell me what cover is good for me. He's an 81-year-old, and he says, so I asked him, do you have any cover thus far? He says, I think my children took for me a cover, but I want to take one for myself. I'm 81 and I want to now go peacefully in that way. And so I thought, interesting. And he was there telling me what he's achieved in his life. A very hotshot in this country. He's telling me he's achieved very many things, but it all comes down to how am I protecting myself now? All these achievements really don't matter. How am I protecting myself now? So in that case, we were discussing a medical cover. And so there are seniors medical covers. I don't know if it's unfortunately, the older you get, the more expensive these things are.
I think it's really a reaction to also the utilization. You see also the pricing that is done by the actuaries. I hope you do remember our episode with a chief actuary in the business, I think it's really advised by also the utilization and the costing.
Yeah.
So those numbers are not haphazard.
Yeah.
When you see that seniors insurance is more expensive than, say, the insurance of a 20-year-old, that really speaks of maybe when an 80-year-old maybe visits the hospital, what is like the probability they'll utilize like 30K or 50K in one visit? Yeah.
So for our senior citizens, don't wait until you are diagnosed with the lifestyle diseases, the diabetes, hypertension, the cancers. Don't wait, because then it becomes very difficult to provide insurance when you already have this condition. And you will be given yes, but price now becomes a whole other conversation. So
and waiting periods too. Yes.
That notwithstanding, if you do have the lifestyle diseases, we still have policies that take care of that.
Yes.
So I would still advise the cost that you would have otherwise incurred in taking regular medication for hypertension or diabetes, that you move that. And if I would want to address this, if you are nearing retirement, and you are currently in an employer cover or medical cover, I think it's important you start saving for your own cover. So yes, you're covered now, but start saving. And most of these employers will get you a post-retirement medical fund that you can put money into, and you start getting covered. So once you retire, you will not need to pay for that cover. You'll be automatically covered because you've been paying before. So we are addressing here are you 40 yet? No. So
approaching.
So the 40-year-olds, even the 50-year-olds, as you approach retirement, before you get to 60, 65, you'll have built up some good fund that will take care of you now for the rest of your life.
Fantastic. So we are talking of medical insurance for retirees. That should be one of the key, policies that they are looking into as they plan for their year. Also, it's a good time to have a conversation. If you're yet to sort of like convert your pension into a retirement solution, this is a good year to really sit down with your financial advisor and weigh the options between an annuity and an income drawdown. And as you're having these discussions, especially on annuities, please, if you're married, for example, sit down with your financial advisor and also get to show me the options of a single life annuity, but also show me, what if I cover my spouse? What does that joint life annuity look like? I think we do have solutions in the market that can really safeguard us against old age poverty. So this is a good time, as you are going into the year early on, sit down with your financial advisor and look at what are the available annuities. And don't just go to one provider. Ask for like 4 or 5 quotes from the best in the market. Your financial advisor will be able to do that, and then weigh that against an income drawdown, and now sit down and see what will work best for my situation.
Perfect. So is it time for us to read the communique to retirement?
Breaking news.
Breaking news.
So Marley, I think great progress especially within the pensions space in the country. Towards the end of 2024, actually on the 27th of December, 2024, there's a new Tax Law Amendment Act of 2024 that came into effect. And it's touched on the pensions or retirement benefits in our country. And I think there are 4 key provisions of the Act. And one of the provisions is that now there's an increased limit for tax-free pension contributions. Okay, so before, the tax deductible amount, like the amount that you could contribute into your, for example, your individual pension plan, that is the interest earned on that fund would not be taxed. It was up to a maximum of 20,000 per month. Or 240,000
per year.
But now this has been increased up by 50%. It's now gone up to 30K. I am telling you, I am so happy, Marley. I do hope one day it can even get to 50 to 100K. But I think these are steps in the right direction. Because in the past, I've encountered so many clients who could actually do more than that 20K. They actually want to save more than 20,000 into their pension. But when they realize that, if I come and do 30K, for example, so you're saying that the interest earned on my 20K will be tax-free. But the interest earned on this extra 10K,
Yeah.
you're about to take 30% of that.
it.
You see, that's the thing.
Yeah. They'd rather not save.
I mean, it's called the corporation tax. Like, it is so high.
Yeah.
The corporate tax in Kenya, like, it's so high at 30%. So to see this move from 20 to 30,000, I think that is just
kudos to RBA. So is this on the individual plan or including what the employer is contributing as well?
Like, I think it's across for the entire industry.
All right.
Yes.
Okay.
Number two, we have also seen a tax deductible contribution to the post-retirement medical fund. I know you have just touched on that.
Yeah.
One, I was very happy to see actually the mention of the PRMF within, this whole discussion of planning for retirement.
Yeah.
I think post-retirement medical funds are starting to catch fire within the industry.
Yeah.
It's my hope that we will get to see more underwriters now sort of like roll out even like standalone funds within their pension schemes. Because I think right now what we mainly have in the market is some segregated schemes, these big corporate
the big corporates, parastatals and the likes.
Yes.
Yeah.
They have already effected this.
Yes.
But now for those of us now, like for business people now who are dependent more on the IPPs, the individual pension plans, we are yet to really get many options in the market. So I hope this will now, we'll get to see more underwriters also roll out PRMFs that are available to IPP holders. But I think this is really, because this also just reduces your payee liability. But over and beyond that, it's an incentive to know that I can save 15K into a fund that will sort my medical expenses when I retire.
So the tax deductible limit is up to 15,000 per month.
Yes, per month.
Over and above what you're doing for your pension.
Yes, so now this is on the side,
Yes,
And I think how the post-retirement medical fund, once you retire and you decide now you want to buy your medical cover, you usually have two options. So there's the one option where you can decide you want it to be like a fund. You sort of like withdraw from that fund as and when you need medical services. So you can just pick money from there to pay for your needs, or you actually buy an annuity specifically just for your medical, medical needs. And then it is that annuity that will be buying the cover for you in your old age. So I think great development within that space, because I must tell you, if there's one thing I have noted, a lot of our parents right now, our older parents, are really struggling in funding their medical covers. So it is you and I and our siblings who always have to sit down and try and do this. So for us to be able to be given these solutions, to be available to us at an early age, then we are able to work towards that, so that now when it's our time to retire, Akina Daniela do not have to carry that burden.
Agreed. Agreed.
Okay.
So that's number 2. Number 3 is tax exemption on pension benefits. So if you're in a registered scheme, you're now exempt from income tax for 3 categories of individuals. If you have reached the retirement age as defined by your scheme, you withdraw due to ill health before retirement age, or you withdraw after at least 20 years of membership.
And this makes me happy because there's something that always used to confuse me. So you've retired at 50, you've retired at 55, and your annuity now is being paid out to you as a monthly income. But KRA still comes and takes income tax. And I'm like, wait, why are you still reducing my monthly income? Like, I need the net of this money. Stop
and it's
coming.
not much.
You get, I mean, I think this was a great move. It's only right, because as it is Marley, there was a survey done by Allianz on just retirees across the world. And do you know, Kenyan retirees, we were part of the bottom 3 retirees globally. Like ranking amongst the poorest retirees globally. That was so sad. So to also have, for those people who have actually worked towards their retirement, for them to finally get there and buy that annuity and buy that income drawdown, and they have their monthly income, and still the government still comes and taxes them. That for me is to,
So I think this is a good one. And
Yes.
if you withdraw due to ill health before retirement, so you're not able to continue working anymore, then again, there's tax exempt there.
Yes.
And lastly, if you've been with that membership for 20 years, so I think those are very good changes to this. And the last one?
Yes, the last one is on they streamlined the registration of retirement funds. So going forward, all the pension funds that we see, provident funds, and even individual pension plans will now be exclusively be registered with the RBA, that's the Retirement Benefits Authority, and they won't have to register with the KRA anymore. Before it was a dual registration, but now it will be exclusively registering with the RBA.
Perfect.
Yes.
So I think we'll need to post this communique on our pages for our viewers.
Yes.
But definitely some very good adjustments to the retiree contribution.
And I think you may want a copy of this. So if you're watching this and you're like, I would want to read that for myself, please just drop us a comment below, on our different platforms, and we'll definitely send you this via DM.
Good.
Yes.
So there you have it, the basic needs for insurance as you start your 2025.
Yes.
There is a myriad of options to take care of your needs. So please, as part of your vision boarding, I hope it is part of what you did.
Yes.
It will be part of mine. Let's make sure that we are insured.
Yes. And from us here at the Truth Be Told podcast, we can only wish you a year full of joy, a year full of good health. Marley, at the top of the episode, he mentioned an accident-free year. Yay! And also a year full of prosperity. I know a lot of us are going into the year with all these big, bold, audacious goals. Let's put in the work. The one thing that I have, honestly, I live and I abide by, Marley, is that just too. But I'm at a point where, Marley, I have to make it or make it like that.
An option.
That's not the option.
Agreed.
But if you really give it your all, trust me, God sees it. Even the world, the universe has a way of just colluding, to just reward that hard work. So we wish you the best as you go into 2025. We are really grateful for your audience. We are happy we are going into season 2 of the TBT podcast.
Oh yes.
Thank you so much for keeping us, on air. Like your views, your feedback has kept us going. And we can't wait to just bring you more people, list of stakeholders within the insurance business. We are committed to keeping that conversation on protection planning and the conversation around insurance in Kenya going.
Thank you. Well, I think that was a good conclusion to this episode.
Yes.
I'm glad. I want to say this. 2025 is my year. I don't know about you.
Yes. 2025 is also my year. 2025 is our year.
Perfect.
Yes.
Until next time,
stay
insured.